Okay, I think we can start. Good evening once again. Today we are looking at chapter 6 of the audit and assurance paper, right? And chapter 6 is about audit evidence and sampling, all right? Chapter 6 is about what? Audit evidence and sampling. Now, remember the last time we met or we discussed, we look at audit planning and risk assessment, okay? And what that afforded us was that it laid the foundation for how the auditor executes their audit engagement. Before the auditor will commence any audit engagement, he has to plan, okay? And the stages of audit engagement, the first stage is what we call the planning. The second stage is what we call gathering of audit evidence. The third stage is what we call evaluation and review of audit evidence. And the last stage is known as what? Reporting. Okay? So this is the second stage in an audit engagement. And it stands audit evidence and sampling. Make please mute your mic. Okay? And the relevant standard for this topic is ISA 500 that talks about what? Audit evidence. Okay? ISA 500 talks essentially about what? Audit evidence. So what is audit evidence? That audit evidence is any information used by the auditor to arrive at the opinion on which his report is based. Okay? It includes information in the accounting records and other information. So what that means is that any information, verbal, electronic, documented, most importantly, documented, electronic, right? All this information are what the auditor, the external auditor, will put together to arrive at his opinion. But at the end of the audit engagement, is going to write an audit report. And embedded in that audit report is what we call the audit opinion. Okay? So we look at audit planning last time. We want us to
No.
look at assessment. Please, Augusta, mute your mic. Augusta, mute your mic. Okay? So that takes us further to the second stage, which is audit evidence. So as the auditor, external auditor, when he embarks on an audit engagement, he needs to plan. And after planning, he will need to do what? Strategize on how he's going to what? Obtain audit evidence. Now, in the course of obtaining audit evidence or gathering audit evidence, he needs to be deliberate. He needs to be intentional about what information he gathers. Because in the long run, whatever information he gathers is what is going to be the basis of his audit opinion. Okay? So that is why this aspect is very, very essential in an audit engagement. If the external misses it at this point, then the audit report will not be effective or will not be able to achieve the needed objective. Okay? So what you need to know is that audit evidence has elements. We have elements of audit evidence or characteristics of audit evidence. For any audit evidence to be useful to the auditor, the audit evidence must be what? Sufficient and appropriate. The audit evidence must be what? Sufficient and appropriate. So anytime you are writing in your exam, especially that you are trying to portray, you are trying to explain information used by the auditor, please, it's better for you, it is more professional for you to use sufficient and appropriate audit evidence as against writing auditor gather information where it's going to base his opinion. It's better you use that terminology, sufficient and appropriate audit evidence. When you write like that, the examiner we know that yes, this person actually understand the paper. Because for you to pass audit, it's not about the grammar you speak, it's about being intentional with the application or the usage of the audit terminology. So what I've talked about now, sufficient appropriate audit evidence, is an audit terminology that cannot be overemphasized. So the earlier you get used to this terminology, the better for you in the forthcoming examination, because you need to display your understanding and the application of these audit terminologies all the time, especially in your paper. Okay, so when you talk about sufficient and audit, what do we mean? So that is more like we are qualifying audit evidence. Okay, so what is sufficiency? Sufficiency has to do with what? Quantity. The amount of information, okay? The amount of information that the auditor will get or will gather, okay? The amount of information the auditor will gather, that is sufficiency, that is quantity, right? While appropriateness has to do with what? Quality. So anytime you are talking about elements or characteristics of audit evidence, or what are the properties of audit evidence, you must be quick to say that the audit evidence must be sufficient in terms of what? Volume or quantity. Because the more information the auditor gathers, the better it is for the auditor to you to what? To express an audit opinion. Okay? Then appropriateness, I said it has to do with what? Quality. How do you measure quality? Quality can only be measured on two premises or two factors: relevance and reliability. So for you to say that audit evidence is sufficient, I mean, is appropriate, you need to prove that that information, that audit evidence is what? Is reliable, and the audit evidence you have gathered is also what? Relevant. When you talk about relevance, what do we mean? That is, the audit evidence must be what? Must be related to the engagement. You should not gather information that will not have direct impact on the engagement. You're able to ask questions that have direct impact on the audit engagement. So you must not lose focus. So any audit evidence that you have gathered must be related. Okay? And that's what I mean by what? Relevance. It must be important. Then, when you talk about reliability in audit is talking about what? The source of the information. How credible is the person that provided what? The information. Okay? We're also going to look at generalization of audit evidence in no time, okay? But what you need to know is that in talking of audit evidence, these characteristics must be present. Number one, audit evidence must be sufficient. Audit evidence must be appropriate. And in terms of appropriateness, we are talking about the relevance of the information gathered and the reliability or credibility of the source of that information. Because that is why the auditor will always depend on information that is what? That is documented. Because he knows that if the information is not documented, the person can deny ever saying or ever giving that kind of information. Auditor will always rely on what? Documented information, or we call it documentary evidence. If the information is not documented, the auditor will not accept it, because that will be to say that, oh, you said it and I've confirmed it and it's documented. So that's why auditors will always rely on what? Documentary evidence. All right? So that's what you need to know about the elements of audit evidence. Now, when performing the audit engagement, it is expedient on the auditor to have gained knowledge or understanding of the client business. You cannot audit what you don't understand. You can only audit what you have understanding about. It's like your phone. Some of us are using big phone, iPhone, but ask some of them that are using iPhone, ask them, how many percentage of the functionalities do they actually utilize? You find out that most of them, they are using iPhone basically for maybe for picture, for taking pictures, and maybe for the long lasting battery life. But you see that in general or in all, you see that the purpose of them using the iPhone is not to be able to optimize the full capacity. So for the auditor, he must be able to understand the client environment. He must be able to understand the client processes, process flow, procedures, policies that is obtainable in the client business. Okay? So as part of when he understands this client business, that is only when it can structure or draw up what we call an overall audit strategy. Because it is when you understand the business, they are going to understand which are the key areas of the business. We have looked at risk assessments in the previous chapter. So that we're able to detect or identify the areas that require much emphasis or much work, or areas that it needs to what to audit to be audited. So the only way you can do this after getting the understanding is to, like I said, is to carry out what we know as what a preliminary audit risk assessment. So that preliminary audit risk assessment will guide the auditor in knowing which aspect of the business is going to focus his attention on. Knowing fully well that the business as an auditor cannot look at everything in the business. So it's going to apply what we call the risk-based approach that is focusing on the key risk areas of the business. Where the business, when there are exposures in those areas, it can bring about the end or it can have a negative impact on the business. Lead capital logistics, please mute your mic. Okay. So for you to audit any client or any business, you must have gained understanding. So how do you gain understanding? You're trying to audit the client. How do you gain understanding? You gain understanding by looking at some of these areas. Number one, you take a look at what? The standard operating procedure of the business. Because every business should have what? A standard operating procedure manual that will detail how processes and procedures are conducted within the what? Organization. Okay? So another area you need to know for you to get an understanding of the client business is to have a one-on-one chat with the management or the board of directors. When you have one-on-one chat with the management and board of directors, it will show more light. It will give you insight, better insight into how the business operates. Then another thing you need to also do is what I call the preliminary audit assessment. When you carry out a preliminary audit assessment, it will afford you the privilege to visit the client business, the business environment. So you can assess critically those areas that poses danger to the business. Okay? So when you have all of this, it is only then that you can now draw up what we call an audit plan that will now be a way that will serve as a guide to how you are going to go about obtaining audit evidence that would later be used to do what? To arrive at the opinion by the auditor. Okay? So the audit plan is very essential because we have looked at that in chapter 5. An audit plan is that plan, course of action of a detailed work that the auditor will do or will carry out during an audit engagement. Okay? So when the auditor is done with this planning, it goes about to do what? To obtain audit evidence. Okay? So that is the way to go. Then that takes us to another segment, which we call the what? The financial statement assertion. Now, financial statement assertion is coming now because it is very, very important when the auditor is carrying out the audit engagement. And what do we refer to as what? Financial statement assertion. These are declaration statements made by management that the information provided to the auditor is free of what? Any material misstatement. Okay? These are statements made by the management explaining that the information provided to the auditor do not have what? Any material misstatement. And there are three types of financial statement assertion. We have assertion based on transactions and events, which is peculiar to the statement of profit or loss and other comprehensible income. Okay? So what do I mean? So those assertions, when the management make the assertion, they look at it from three angles. First of all, because they are the one that prepare the financial statement. So later we ask them, this financial statement that you have given me, you have presented to review, how am I sure that the information contained therein is correct? Then when the author asks, they do not reply that the information contained there is correct. How? They will now give the assertions. And that is why the first assertion is called what? Assertion based on transactions and events, okay? Or otherwise known as what? The statement of profit or loss, other comprehensible income assertions. Okay? So all these types of assertion we want to look at now under this assertion based on transactions and events are related to the profit or loss and other comprehensible income. You can only find them in your what? Statement of profit or loss and other comprehensible income. Okay? So let's go on. So the first assertion is called what? Occurrence. Occurrence. What is occurrence? So the author will ask them, what is occurrence? You said that the financial statement shows, does not contain any material misstatement. You are giving me instance of what? Occurrence. So what the author will do, the management is to present or to state those assertions. The auditor role is to test. Please mute your mic. Okay? So occurrence is a statement made by the management saying that the transactions that we have recorded in the financial statement actually occur. So the auditor object, what the auditor will need to do is to test. You know, I said that auditor will test those assertions. The auditor will now test the assertion whether those transactions and events that have been recorded have occurred and pertain to the entity. What does that imply? So there are times when you have subsidiaries. Okay? So, and sometimes if the accountant that is entering or posting those transactions is not meticulous, it can post transactions for another subsidiary into the other subsidiary that the transaction never occurred. Let me cite an instance. I once worked in an organization and I was looking at the asset schedule, right? Because I've taken time to understand the client business, I saw a car and I know the manager or the head of the organization, the director that drives that car or that owns that car. And I saw it in under another subsidiaries' asset schedule. And I asked to ask them, this your asset, when I look at the asset register, this your asset, this particular car is not for this subsidiary, it's for the other subsidiary. And they have been calculating depreciation on that asset to another subsidiary. The other said, thank God that he didn't even, he just saw that all the cars, because they are the same brand, it's just really that the car this is the brand of the car, it should be there. Yes, it's the same brand, the same amount they bought the cars. Okay. But what I'm saying here is that because the car has been distinguished using what? Registration number. And for me, I'm fortunate to be able to recollect the registration number. So when I saw the registration number on the asset, I said, no, this car is not supposed to be here. When I'm looking at the asset register, it's not supposed to be there. So that's what we are saying. So later we check that, for instance, if I don't see that thing now, all the repairs, maintenance on that car would have been posted to another entity. And that would distort the financial statement. That's what we mean. All right. The next assertion is called completeness. By completeness, what the management is saying here is that all the transactions that they have recorded have been what? Have been fully completed. That is, they are not work in progress. They have what? They have obtained all the information and everything is what? Is intact. So what will the auditor do? The auditor role is to do what? Is to test whether all transactions and events that should have been recorded have been what? Have been recorded. So imagine you work in an organization, let's say a manufacturing organization, that import material or raw material, or they import property, plant, and equipment. Now, you agree with me, for some of us that have been privileged to work at that level, that sometimes when you order something from the abroad, the documentation will take time before it is completed. Sometimes you'll have even put the assets to use. You'll have put the plant and equipment to use before the documentation will come. So the onus is on the accountant or the management to be able to ensure that all necessary documentation have been what? Have been obtained. Because if those documentation are not obtained, what it means is that in the course of calculating the cost of the asset, remember in your IAS 16, right? Your IAS 16 says that for your assets, for you to talk about assets, for you to be able to determine the value of your asset, it must include all the costs incidental to putting that asset to use. All the costs. It's not only it's not only the invoice value, the freight cost, insurance, if there's any commission or the commission, servicing, to put that asset to use, all must be aggregated. So imagine you don't have all the documentation at the time you are preparing the financial statement, or at the time you are posting into the asset register. That means that whatever information you have put there would have been what? Not completed. Okay, so that means that even when you are calculating your depreciation, which is a profit and loss item element, and also in the statement of financial position, the completion would have been what? Would have been wrongfully computed. So what the record will do is to test whether the transactions and events that should have been recorded have been recorded. That is all those assets, okay, or all those transactions, all the documentation have been what? Have been obtained. The third one is to look at the other assertion the management will make is what we call accuracy. Accuracy. So the manager will say that we are very sure, because that's the essence of the financial data, that we are very sure that the information that we have, all the information that we have computed in the financial statement are accurate. So what will the auditor do? The auditor will test whether amount and other data relating to recorded transactions and events have been recorded appropriately. For instance, you bought an item for 510,000, but when you are inputting it, when you are posting into the account, into the proper account, you posted 501,000. That's transposition, right? That's what we mean. So all of this, the auditor check, because the auditor, how will the auditor verify this? By requesting for the what? The source document. By then the auditor vouch the documentation, you're able to fish out those areas where there are what? Where the figures are not correct. Okay? I hope we are together. Then another thing management will also say, still under this assertion based on transactions and events, is that the manager will say that we have applied what? Cutoff. What is cutoff? Cutoff is a procedure that is obtainable in most organizations, where to um, be able to properly allocate, okay, cost, or to be able to what? Attribute a cost to an expense, right? That keeps running, or that must be, or we call it fixed cost. Okay? Fixed cost example is your salaries and wages. So if you don't apply cutoff for salaries and wages, what it means is that the basis for calculating salaries and wages will be disjointed if there is no cutoff. That is why for most organizations, they have different cutoff dates for salaries. They will tell you that if you join an organization on also and so date, for instance, if you join an organization on the 22nd, some organization will tell you that for that month, you will not collect salary. They will add up your salary to the following month. Some organization will tell you like that. Why are they doing so? Because at the time that the new staff was employed is after the cutoff period. After the what? The cutoff period. Also, closing of accounts, monthly accounts, also apply cutoff. They also apply cutoff procedure to it. Because if you don't apply cutoff to it, if there's no control, what happens is that the accountant will keep on posting, even when the transaction has been long past that duration. Let me give an instance. So you made some sales, right? Or let me not say sales. You made some purchases, right? Then after you made those purchases, they've not, you are still allowed, because they tell you that you can still post, just keep posting. So mistakenly, the accountant will buy some items, let's say on the 2nd of a new month, because there's no control. Rather than for the accountant to post into a new month, let's say for instance now, you're supposed to post into the month ended 31st July, right? Month ended 31st July. But you now make some procurement on 2nd of August. But because there's no control on the account that, okay, any transaction that is after 31st, do not post. Okay? The accountant can keep on posting. And when the accountant keep posting to that account, what happens is that by the time you prepare the financial statement for that month, you will see that your purchases would have been what? Over bloated, because what you have accounted for as your purchases combines the current purchases of that month of July and subsequent months. Hope you are getting it. So that's what we mean by cutoff. So the auditor will test whether transactions and events that should have been recorded in the correct accounting period. Because if they don't record them in the correct accounting period, that means that you'll be providing misleading information. Some also do it in sales. You place order. Somebody's supposed to have closed order by 31st July. But because there's no control on the account, they should, that once it's 31st, you should not be able to post into that account again. Right? On the 1st of August, the person will say that it's not just one day. You still post it into that July. So the order for the month, the sales for the month of July will become what? Over bloated. So what that means that the information in the financial statement becomes what? Misleading. So that's what the auditor will test. Another thing the auditor will also test using the cutoff is, for instance, assets. You want to calculate depreciation. Sometimes you bought an asset in the middle of the month. Rather than you to do half month depreciation, the accountant will do full month. So these are the things the auditor will check. Cutoff. Okay, the last one under the assertion based on transactions and events is what we call what? Classification. What's classification? There's what we call allocation in accounting. That is, you need to post into the correct account. All right. So, for instance, when the management says that they are sure that they have classified all the transactions into the right account, the auditor will test whether transactions and events are properly recorded in the proper account. Okay? Do you understand? But let's take an instance now. Let's take a look at our revenue. IFRS 15 talks about what? Revenue with contract, right? Now, what is the position of the standard under revenue? It says that revenue should not be recognized until when it is what? Until when it is earned. So, for instance, you sold uh finished goods to your customer or to your distributor, let's say around June. Let's say June 20th. The money came in the month of what? Came in the month of what? July. And you now posted that money in July. What have you done? That means that you have not fully applied the IFRS 15 that talks about what? Revenue recognition. Or better still, there are some transactions that if you don't look at them closely, they can be what? They can be misleading. For instance, you know there's in your manufacturing trading profit and loss account, there's what we call factory wages, or we call it manufacturing wages. It is different from your salaries and wages. Factory wages or manufacturing wages is part of what? Cost of production. Or let me say, it's part of your prime cost. When you want to tell me what's your prime cost. Apologies for some of us that have not been, for those that have been in the position that can understand what I'm saying. What I'm trying to do is I'm not trying to paint a picture that you can understand. So we are not just reading and we are saying that, oh, this thing is abstract. I'm trying to make it practical. So for those of us that at some point when we are writing, when we commence our trading in accounting, we have done what we call manufacturing trading profit and loss account. And when you want to determine your what we call your prime cost in your manufacturing trading profit and loss account, there are three elements. You have direct labor, you have direct material, okay, and you have direct expenses. So the addition of these three will give you what? Your prime cost. So that direct labor can also be substituted with what? Manufacturing wages. or factory wages. So when you see it, it should be added to the what? To the cost of production. That is the prime cost. But if you have an account that is not meticulous, it just sees wages. It doesn't want to care whether it's manufacturing wage or what. It just add it up to your salaries and wages. Salaries and wages will come under admin expenses. But you have now added your manufacturing wages to your what? Admin expense. That what have you done? That means there is a misclassification of expenses. So the other is to test whether transactions and events have been recorded in the proper account. So all of this I talked about now relates to the first assertion based on what? Transactions and events. Any question before we proceed? Any comment? Any observation? Are we good? Okay. All right. So let's go. Go to the second one. I told you there are three assertions, right? The second assertion is called assertion based on account balances. Assertion based on what? Account balances. So what does that mean? That means that this assertion is tested when you are looking at your what? Your statement of financial position. All these assertions are related to your what? Your statement of financial position. So what that means is that you cannot say you are testing existence in assertion based on transactions and events. That is an anomaly. You can only test existence under assertion based on what? Account balances. Because in your statement of financial position, if you remember, when you draw your T account, you have balance brought forward, balance brought carried down. That balance carried down is what you are now going to take to the next period as your balance brought forward. So that's why we call it account balances. Assertion based on what? Account balances. So those account balances are common with what? Statement of financial position. So the manager will say that we are sure that all the liabilities, all the assets and equity interests that we have recorded actually exist. And let us responsibility to do what? To go and test that assertion, whether all assets, liabilities, and equity interests exist. Remember, it has changed from when we are looking at the assertion based on transactions and events, when we made mention of what? Whether transactions and events have been recorded. We never make use of what? Assets, liabilities, and equity interests. But when it comes to account balances, assertion based on account balances, we are making use of what? Assets, liabilities, and what? Equity interest. So later we test whether assets, liabilities, and equity interests exist. Okay? How will you do the test? For assets, you will do what? Carry out asset verification. For liabilities, what will you do? You request for what? Documentation to show that that liability exists. For instance, the company has taken a loan from a bank. You request for what? The loan agreement. Because the loan agreement will contain the repayment schedule, it will contain the duration, okay? It will contain the amount and all what have you. The equity interest also, we also check the shareholders certificate or the ordinary share certificate, okay? To show that, oh, so and so has so much shares in this organization. The second one is what we call the management will present another assertion here called what? Right and obligation. Right and obligation. Why do you call it right and obligation? Now, this is an assertion that combines two elements. Right to use an asset, okay? Then obligation is another one. What does that mean? This one is referring to your IFRS 16 that talks about what? Leases. Okay? So there are times when you work in an organization that you cannot afford to buy an asset that you use to generate economic benefits. That is an asset. An asset is anything you use to generate what? Economic benefits. So for instance, you work in an airline company Some of the airline companies we have in Nigeria, the airline companies do not own those airplanes. They lease them. So because you lease those assets, you cannot put the full value of that asset in your books. Otherwise, tax authorities will come and slam you every penalties. Excuse me. So what do? You're only going to recognize the lease rentals that you pay on that asset in your books. So anybody that sees your book will know that, oh, truly you don't own this asset. This asset is on lease. You are paying lease rental on that asset. So the auditor will ask. The auditor's ability is to test whether the entities hold or controls the right to assets and liabilities are the obligations of the entity. Okay, so the auditor will ask for the lease agreement to show that you are using these assets. It could also be building, it could be a warehouse. When it does come to your organization, they will ask you for where is your lease agreement. We want to check whether those warehouses belongs to you or they are on lease. Then all obligations, for instance, if there's any liability, okay, if there's any liability, you also need to also show whether you are meeting up with your what financial obligation. For instance, you take a loan from the bank as an organization. Whether we ask for your repayment schedule to see whether you are religiously pursuing the repayment schedule. Because it will tell you that if you are not pursuing the repayment schedule, you will have spoiled your chances of obtaining additional loan in future for expansion. Okay? The third one, the management will make mention of is what completeness. Now, completeness is we found it in the first one, assertion based on transaction and events, right? And that one relates to what? Transactions and events. But this one, the auditor will test whether all assets, liabilities, and equity interests that should have been recorded have been what? Have been recorded. Okay? So you have an asset. There is an office that you have been using in your organization. The auditor will ask you, can I see, do you have the CFO of that building? We say we don't have. So what that means is that, let's say, for instance, Lagos that is demolishing some areas, some houses in some areas, they come to demolish. How do you get compensation? Because for you to be giving CFO, it means that it has been duly allocated to you by the government, provided the CFO, certificate of occupancy, is not voided. It has not been revoked. If the CFO has not been revoked, that means that should there be any demolition by government anytime in future, they can either pay you compensation or they get another place for you. Remember, in Lagos, some years back, I think last year or 2 years ago, when the government of Lagos State was constructing the Ikeja along bridge, that bridge that enters from where is it coming from now? From where is it place now? PWD, where you climb and takes you down to Ikeja, Awolowo way, that side. Because of construction, all those railway quarters that were situated just after the airport bus stop, that railway quarters, the railway quarters was demolished to pave way for the monorail and the, what we call it, the bridge. Because those quarters, those people that live on the rail, in the quarters, is a railway. So that means that they have what? C of O. What the government do? Government resettled them in another area. He built quarters for them and gave them the keys. Go and check, go and verify. Okay? So what we are saying here is that you want to know whether all the documents that are supposed to have been collected concerning transactions that relates to your assets, liabilities, and equity interest have been what? Have been obtained. That's what they mean by should have been recorded and have been recorded. The next one is to talk about what? Valuation and allocation. If you go back to your IAS 36, that talks about what? Impairment. Impairment says that you should test your assets for impairment at least once a year. The essence is that you want to ensure that your um, carrying value, okay, is not less or more than your realizable value. Okay. So what will the auditor do? The auditor will ask them, are you telling us that all these your assets have been valued? He said yes. Now what will the auditor do? The auditor will now test whether the asset, liabilities, and equity interest are included in financial statement at the appropriate amount, and any resulting valuation or allocation adjustment are appropriately recorded. So what the essence of carrying out impairment is to be able to put the right carrying amount, carrying value of your asset in your books. For instance, you have an asset, let's say a building. Before the building is located along that Ikeja, along that before Computer Village. That was where the building was located. Now, that building has been there before they constructed that new bridge. Now, they constructed the new bridge. As at that time, before the construction of the new bridge, the value of the assets of the building was, let's say, 50 million. Upon the construction of the new bridge, the value of the asset, when it was revalued, the value of the asset jumped to 100 million. But if you have not revalued your asset, if you have not carried out impairment, you won't know whether the carrying amount or the carrying value you have about those assets is actually correct. It's the auditor that will test. And when you do the testing, the impairment testing, you also verify that all those adjustments have been properly accounted for. Okay? So that is all about the second assertion. Assertion based on account balances. Any question? Any comment? Any observation? Think we are good, right? Okay, let's go to the last one. Assertion based on presentation and disclosure. Assertion based on presentation and disclosure. This assertion is related to both the statement of profit or loss, other comprehensible income, and the statement of financial position. I take it again. This assertion based on presentation and disclosure is related to both the statement of profit or loss, other comprehensible income, as well as your what? Your statement of financial position. How do I mean? Now, when you're talking about this assertion, it centers on what? Presentation and what? Disclosure. Now, if you look at the composition of the financial statement, there's one composition that we call what? Notes to the account. So without the notes to the account, you cannot conveniently interpret or make sense of the financial statement that the auditor is being presented with. And that is why presentation, the auditor must ensure that the financial statement is prepared in line with applicable financial regulatory framework. And all necessary disclosures have been what? Have been made. So the auditor will check, the auditor will ask them, and they will say, because like I said, it's a combination of your what? Your statement of financial position and your what? Statement of profit or loss, other comprehensive is combination of the two. Okay? Because it's a combination of the two, what they have done is that they have merged those assertions, the first two assertions that relates to assertion based on transaction and event and assertion based on what? Account balancing. So, hello, Ruth, please mute your mic. Occurrence, you have it in your what? In statement of, your assertion based on transactions and events. Okay? And your rights and obligation, you have it what? Under your what? Your assertion based on account balances. So both of them are now fused. They are joined together, or they are joined, and the auditor will now test whether disclosed events, transactions, and other matters have occurred and pertain to the what? To the entity. So what that means is that those assets that you are using, the right to use an asset, they don't want to know whether the assets have been recorded in the books of the company or the entity that is using it. And also for you to also test whether those assets actually have been what? Put to use. Okay? The asset have been what? Put, that's what they mean by occurrence. Then the second one is called completeness. Completeness is the only assertion that is common to all the three types of assertion, completeness. Okay? So here, the auditor will check whether all disclosures that should have been included in the financial statement have been included. You know, I explained something when I was talking about disclosure. If you don't have the right disclosure, if you don't have all the necessary disclosure in the financial statement, the auditor will not be able to make informed decision or opinion about the financial statement. Okay, the next one, classification and understandability. The auditor will test whether the financial information is appropriately presented, described, and disclosures are clearly expressed. When you're looking at financial statements, one of the duties of the auditor is to ensure that financial statements are what? Are prepared in line with applicable financial regulatory framework. So one of the things that you need to look at is to ensure that they have been classified in the right way, presented in the right way, and all necessary disclosure that will enable understanding have been what? Have been included. Okay? Then the last one is what we call what? Accuracy and what? Valuation. So here, the auditor will test whether financial and other information are disclosed fairly and at appropriate amounts. So what that means is that if you remember, accuracy is talking about what? Assertion based on what? Transactions and events. And valuation is part of assertion based on account balances. So what that means is that when they are carrying out valuation of an asset or any financial information, they should be sure that, or they should be careful, or they should ensure that they post only the right amount. They should not they should not inflate the figure or underinflate the figure. They should not overvalue and they should not undervalue the figure. That's what this one is talking about. Okay? So with that, we are done with assertion. So as an auditor, the auditor needs to be able to use the right assertion or know how to test those assertions, because his understanding of those assertions will enable him to be able to make or to come up or to form an audit opinion that is what? That is satisfactory or that can influence the investment decisions of the users of financial information. Okay? So you must ensure. So another thing we need to also look at now is to look at what? Methods of obtaining audit evidence. Methods of obtaining audit evidence. There are 7 different methods of obtaining audit evidence. And each of these methods, right, they are mutually exclusive. That is, you can use them on their own. But for you to have a reasonable level of assurance, it's advisable that you combine more than one of these methods so that you can have reassurance that whatever audit evidence you have obtained is what? Is sufficient and is appropriate. So we start in no particular order. We start the first one, inspection. Inspection is a method of obtaining audit evidence that is based on what? Examination of records or documents, whether internal or external, that could be held in various forms, e.g., paper, electronic, or otherwise. So what we are talking about is this. The auditor will ask, for instance, you say you have a loan that you are paying. The auditor will ask, for, can I see the loan agreement? What did you like to do? You want to inspect the document. Oh, we bought a car. You know, request for, can I see the what? The particulars of that car. It's about what? Inspection. Sometimes it could be inventory. You want to see whether those inventory they are still in order or they have not expired. That can only be done by doing what? Carrying out what? Inspection, which is a what? A method of obtaining audit evidence. Remember the last time when we had COVID, when they broke into some of those palliative warehouses, some of them have rice that have what? That have expired. So let's say the company is into rice production, and they have some of those rice in store, and they have put it as part of their inventory. The auditor is mandated to say, let me go to the inventory, let me go to the warehouse and check the status of the rice. So that is what he will do. Okay? And in some manufacturing organizations also, when they conduct their monthly stock count, the essence of conducting monthly stock count is to do what? Is to inspect whether some of those inventory in the warehouses have expired or they are damaged. Because warehouses are big places. It's only when you do stock count that you can check, because you are going to check everything. But if you don't make your stock count to be monthly, then there is every chance that some of the items you have in your store or warehouses may become what? Expired, or they become what? Obsolete. Okay? Next one, observation. This is another method of obtaining audit evidence that relates to what? Looking at a process or procedure being performed by others so that evidence about the actual performance is obtained. Okay? So what does this mean? So in this method of obtaining evidence, the auditor will do what? We look at a process or procedure being performed by others so that evidence about the actual performance is what? Is obtained. A classical example is when they are doing what? Inventory count. When they are doing inventory count, you have the account department personnel there, you have the store personnel there, right? You have the internal auditors there as well. And when you have the external auditors, if there are more than two, one of them will just be what? Observing. Why is he observing? Why the stock count is ongoing is observing to be sure that no item, no inventory, no stock is left uncounted. Okay? No inventory or no stock is what? Is left uncounted. What would you do? You just observe as they are being done. Okay? So the next one is called external confirmation. Now, external confirmation from the word you see is what? It relates to what? Obtaining audit evidence from a third party. Obtaining audit evidence from what? From a knowledgeable third party. We call it what? External confirmation. Okay? So how do I mean? So for instance, the auditor requests that as external auditors, you don't know, you are not trained to know to be able to estimate the value of a building or of an asset. For instance, you have a client that's into real estate. let's say Revolution Plus, okay, or Adron Homes that are into what? Real estate. Now, if they are doing their audit, you have some buildings that are half or partly completed, and some they are what? They just started the foundation. The auditor cannot ascertain the value of this building. So what will the auditor do? The auditor will trust in the expertise of those people that are trained in that area. Example of people that are trained in that area are the people who call what? Quantity surveyor. The quantity surveyor can tell you how many blocks, how many sharp sand, how many gravel you need to build what? To build a 4-story building or a 3-story building or a 2-story building. A surveyor can tell you. The auditor cannot tell you. So what will the auditor do? The auditor will rely on that information. Remember, also, architect can also do same. Architect also, they have what we call what? Architect certificates of job of work completed. So when there's a job, a project that is not yet completed, an architect can estimate, can value that project and tell you this is the percentage that has been done. So all we just do is to obtain that information and use it and compare it to what they have computed or what they have applied during the valuation of the financial statement. Okay? Then you have another one. It's called what? Recalculation. Recalculation is another procedure that checks the mathematical accuracy of documents or records that can be used to verify the accuracy of the records or transactions. Okay? So what does that mean? So when the client has already got the financial statement, later we need to what? To verify or to re-verify or to recalculate. Later we do what? Later we do what? We recalculate to be as certain that the figure that they put there is correct. Most importantly, sometimes when you export from the software, either ERP or account package, sometimes some figures, some submission will become disjointed. So therefore we need to check that those figures are what? Are correct. The subtotals are correct. Then we have another audit procedure that is called what? Reperformance. Reperformance is another audit procedure that entails the independent execution by an auditor of procedures and controls that were originally performed as part of the what? Part of the entity's internal control. Let me explain. Now, the performance, a classical example is when you say you have put some controls in place. The auditor will now want to check. Let's say, for instance, you just implemented a new ERP for your organization. And the auditor has asked you that, are you sure these controls are in place? You said, yes, those controls are in place. What we told you, just create that they should just allow him, they give him access, grant him access to the system, any system. And what will he do? He will say he wants to carry out a dummy transaction. So upon carrying out the dummy transaction, he checks that when he initiates the transaction, you want to check that those controls have been what? Have been what? Activated. So he tried to initiate a transaction, and up to the point of approval, he sees that there was no control. There was no checks and balance. There were no checks and balances. So what does that mean? So that means the auditor has been able to verify that, is able to obtain sufficient evidence that the newly implemented ERP do not have what? Existing internal control system in place. Okay? Do you understand? So that process I just explained now, the auditor will be granted permission to initiate a transaction or to the what? Or to approval. It's what we call what? Walk through testing. Walk through testing. Okay? Then the last one is called what? Analytical review procedures. Analytical review procedures has to do with what? The relationship between financial and non-financial data. This shows what? Possible relationship, related relationship between financial and non-financial data. Example of analytical review procedures, there are 3 of them. First one is called trend analysis. When you carry out trend analysis, We are doing what we know as what? Analytical review procedures. There's a type of analytical review procedures. Okay? There's also what we call ratio analysis. It's also a type of analytical review procedures. Okay? So those are the last one is inquiry. Inquiry is another type of audit method of obtaining audit evidence where the auditor does what? The auditor asks questions, okay? The auditor does what? The auditor asks questions about what? Information, both financial and non-financial, from knowledgeable person within the organization or outside the organization with a view to what? Obtaining understanding of how processes are being carried out or conducted. For instance, the auditor has read the standard operating procedure and he now says that, oh, now, what do I want to do? I want to be able to, I want to ask question, how do you go about your P2P, procurement to pay? How is the process like? He's asking a question. When he's doing that, he's doing what we know as what? Inquiry. All right? So that is that about the method of obtaining audit evidence. Any question? Okay? So the other area we need to look at here is what information can be used as audit evidence. So as an auditor, any information that is sufficient and appropriate can be used as what? In the course of obtaining your audit evidence, you are gathering everything that you think is relevant. There are some information that you gather that might not be suitable for that particular engagement. So all those information, you will do what? You need to what? Take them out, eliminate them. Okay? So that is how it is done. Now, how will the auditor depend? How will the auditor depend on the what? On the audit evidence? How will he know that okay, this information is what? Can be used? How will the auditor conclude that this information can be used? Number one, that's when we talk about what? Generalization of audit evidence. Number one, the reliability of audit evidence is increased when it is obtained from an independent source outside the entity. That is for the auditor to use any information. Number one, that information must have been obtained from independent sources outside the entity. Because he believes that when you get information from outside the entity, such information tend to be more reliable than information you get from the what? From the organization. Why? Because sometimes the information you get from the organization can be what? Can be doctored because they don't want you to know. When you get it from outside, those information is always what? It's always more reliable. Okay? Number two, audit evidence obtained directly by the auditor is also more reliable than audit evidence obtained indirectly or by inference. What that means is that any information the auditor obtained by himself by asking questions, by reading the procedure manual, is more reliable than any information that is being provided by the client or something that he got from maybe assumption, inference. Number three, audit evidence obtained in documentary form is more reliable than audit evidence obtained in what? In oral form. Okay, in oral form. As I said, the auditor does not rely on what? Oral information. The information must be documented. Number four, audit evidence of audit evidence obtained in original copies are more reliable than audit evidence obtained by what? Photocopies or facsimile. What that means is that original copies are always one, but photocopies can be what? Duplicates. Can be what? Can be many. So sometimes or most times they have used duplicated copies or photocopies to perpetrate fraud. What do I mean? You have paid money to the vendor using the original invoice. Because the original invoice was not serialized, somebody went and photocopy the original invoice again and said that, oh, we have not paid. Okay? And they make another payment. Making what? Two payments. Especially if the payment from that particular vendor is the same. It's always the same over and over. That's why auditors will always prefer original document, knowing that it's always one copy. Original is always one. There's no two original. It's only one original. But photocopies can be diverse. So that's the way the auditor will know whether he can rely on any audit evidence that is being presented. And we look at that as what? Generalizations of audit evidence. Okay? I hope we are clear. All right. Then we go on to the next one. What are the methods available for the auditor to selecting items for testing? Remember, when the auditor wants to carry out, when the auditor wants to obtain audit evidence, he needs to take a sample. Okay? He needs to take samples. That's why we talk about what audit sampling. So how does he go about those samples, right? Now, there are three methods the auditor can use to obtain, or to select items for testing. Number one, he can select all of them 100%. He can do 100%. How does he, why would he do 100%? He can do 100% when the items are not many and they are of high value. They are not many at what? And they are what? They are of high value. So high value here means, for instance, let's take the company that produces airplanes, Boeing or Airbus. Now you agree with me that no matter where you park your airplane, it can be conspicuously seen. You can see it. Okay? So that kind of an asset, and they are very expensive. You cannot say you can't count it. You can count them because they cannot be too many that it will not be possible for you to count. Comparing that to a sack of safety pin or a sack of needles, you can see that it is all different entirely. Or a sack of bolts and nuts. You can spend 5 years counting it. The person will not be able to finish counting. But you can use 100% for items that are what? That are new and that are of high value and they are not much. Okay? The second one method you can use is called selecting specific items. What that means is that you are using something that relates to what we call in costing or in performance management, we call it what? Pareto analysis, 80-20. So what that means is that you look at your items, you classify them. So you say that 20% of your items, they are of high value, while 80% of your items, they are of low value. So you say that you take more of the low value, or vice versa, or you use 80% on your high value, you 20% on your low value, depending on whatever method you want. All you are trying to do is that you will not be able to count everything. But what you are going to do is to apply the um, selecting specific item method for selecting items for testing. So you are just going to apply that 80-20 Pareto analysis. Okay, you take more from the valuable one and less from the less valuable ones, then you mix it. Okay, that's what we mean. For instance, in Nigeria, let me give you an instance. In Nigeria now, we have the three major languages, Yoruba, Igbo, Hausa. Then we have the other languages that when you break it down, it will span to 350 different languages. Do you understand? So rather than for you to make it clumsy, say you want to identify all the 350 tribes and languages you have in Nigeria, I rather classify it into what? Into three. Yoruba, Igbo, and Hausa. That's what we are trying to say. Then the last one is called audit sampling. Audit sampling is a method where you pick a percentage from the entire population and you use the information to generalize the entire the sample you have taken. You now use the result to generalize or to conclude about the what? About the population. For instance, somebody says that all Yorubas are what now? All Yorubas like party. Or they say that all Yoruba guys are Yoruba demons. If they say all Yoruba guys are Yoruba demons, what that means is that every Yoruba guy that you meet, they are demons. So the person that make that statement, how many Yoruba guys has the person met what that means is that the person has met all the Yoruba guys all over the world, and in Nigeria in particular. And that is, that is impossible. So what the person means is that he has taken a sample. He has just used one or two person in Yoruba tribe to conclude that all Yoruba guys are this way. That's what we call what? Audit sampling. Okay? That's what we call what? Audit sampling. And that takes us to the next topic, audit sampling. Now, this sampling is what we call what? The method of selecting a sample of items to be tested, which covers less than the total of the population. Okay? But provides the chance of all items to be what? To be selected, so that the may have a reasonable basis for what? For drawing a conclusion. Okay, it's just what I said. I'm just reading it. So I've said it before. I said when the auditor takes a sample from the population and use that percentage, okay, to conclude on the entire population, that is already sample. Okay, it's not different from what you have here. Okay, don't be disturbed. Okay, so that takes us to the next. In all this sampling, right, we have what we call. I'll come back to this one. We have different method of sampling methods, different sampling method. We have the random sampling, which means what? All items in the population have equal chance of being what? Selected. Okay, for instance, when you do a raffle draw, everybody that bought tickets have equal chance of being selected. Okay, the other one is systematic sampling. With systematic sampling, a random starting point is chosen from the population, and then items are selected with a standard gap between them. For instance, you pick the first transaction, and when you are testing for materiality threshold, you pick the first transaction. You now went and look for the 10th transaction. After that 10th, you go and look for the next. After 10, you go to the next. You go to 20. You go to 30. You go to 40 like that. So at interval, you're having a fixed gap of what? 10, 10, 10, 10, 10, 10. Okay, that we call systematic. Then you have the haphazard sampling. Haphazard sampling is when you select a sample on an arbitrary basis. That is, you just do it anyhow. When you take a sample anyhow without any defined procedure or technique, it's called what? Haphazard. So you use haphazard sampling when you're talking about what? Non-statistical sampling. Okay, you use haphazard when you talk about what? Non-statistical sampling. But when you use the random and systematic, you use them for statistical method. Okay, statistical sampling method. All right. So that takes us to the next one. What do we mean by what? Deviation. So what we mean here is that there are times that the auditor has said that, oh, the sampling, okay, is the sampling is okay. Okay. And there are times when the auditor does the sampling and it's discovered that the sampling does not actually represent, or the sampling misrepresents the entire population. Then you talk about what? Deviation. An example of this is when you talk about, remember we look at it in chapter 5, performance materiality and overall materiality. So you are sent out to go and do a materiality threshold to determine the materiality. You had your basis. On getting to the field, so that your overall materiality threshold does not apply. Okay? Your overall materiality does not apply. What do? You reduce your what? Materiality threshold. When you reduce your materiality threshold, it's what we call what? Performance materiality. Remember, we talked at length on this last time. I'm just using it as an example, which you understand what we mean by deviation, because deviation means that it's less than what you are expected. Okay, it does not meet up with your expectation. That's why you have deviation. Okay, all that is clear. All right. So, any question, any comment, any observation? Do you have any observation, comment, question?
Please, can you come back on that deviation, please?
You said?
Can you come back on that deviation?
Okay, what I said about deviation is this. Deviation has to do with the sample that has already been taken being different, because I said that sampling has to do with what? Being a good representation of the population. But now you have taken a sample from the population. But that sample you have taken did not meet up with what? With the expectation. So what that means is that there is what? There is a deviation, or we call it variance. Okay? Now, when you have variance or deviation, there are two types. You have the tolerable ones and you have the intolerable ones, like normal loss and abnormal loss. All right. In production, we have what we call normal loss. Okay. So that's example now. So for instance, what's normal loss? For instance, let's say you work in an oil and gas company and they tell you that, okay, when you are discharging, there's a normal loss that when you are discharging into the storage tank, there's a normal loss of, let's say, maybe 10 liters, okay, into a storage tank. That's normal loss. But when it comes to 100 liters, that is abnormal loss. So normal loss will be what will be written off. But abnormal loss must be accounted for. So I hope that is clear, sir. Mr. Dejo.
Yes,
Is it clear?
yes.
All right, thank you. So we're looking at the next area, which is what we call documentation and procedures for audit evidence. Okay. So what that means is that we are going down to talking about how you document the audit evidence. And that's the next area we are discussing. And that area is called audit documentation and audit working papers. The relevant standard is ISA 230. Okay, what do we call audit documentation? Okay, what it means is that all information must be what? Used by the auditor must be properly documented. All the working paper or documentation are information obtained by the auditor, okay, that are documented for the purpose of what? Making or forming an opinion, or forming an audit opinion about the engagement. Audit documentation, audit working paper is the same thing. Refers to the information obtained and documented by the auditor in order to enable the auditor to draw conclusions about the engagement or about the audit engagement. Okay, that's what we call audit documentation. The audit documentation is very, very important. So when the auditor is done with when the auditor is doing is performing his engagement or conducting his engagement, he must ensure that he has what we call audit working paper. So all the information that is going to use must be documented in the audit working paper. Okay? And the audit working paper is divided into two. Okay, we'll come back to the importance of audit. Let's look at audit working paper. Okay? Divided into two. We have the permanent audit file and we have the current audit file. Permanent audit file, as the name implies, means audit documentation that is contained in a file that will be significant for more than one audit. I take it again. Permanent audit file is a file that contains audit documentation that will be utilized for more than one audit. Why? Because the information contained in this file does not change. The information contained in this file does not change. Examples of those information or documentation. Number one, the legal constitution of the company. What's the legal constitution of the company? That is the articles of association and memorandum of what? Association. This does not change unless the object of the business has changed. Number two, other important legal documents such as what? Loan agreement. Loan agreement also does not change unless there's been a new additional clause, okay, to the loan agreement. Number three, summary of the history, development, and ownership of the business. So the history of any business cannot change. Okay. So Union Bank started in Nigeria as what? Barclays Bank. It can never change. You cannot say Union Bank is the name from inception. No. It started as what? Barclays Bank. Wema Bank started as what? Agbomabe Bank. That was the bank. That was how it started. That is the historical name. How the bank started. So nobody can now say that, oh, I want to remove that Agbomabe. I want to be known as Wema. Wema is just a new name. When the bank first started, their name was what? Agbomabe Bank. Okay? So that historical information does not change. Then the record of the accounting system and procedures used by the client does not change. Your accounting procedure, your accounting manner also does not change unless there is a change in what? In the ERP that you are using. Okay, in organization. Number 4, copies of past or previous financial information cannot change because they're already in the past. Okay, you cannot change the past because they belong to the past. So all of these are examples of documents that are contained in the permanent audit file because they are not expected to change. They can be used for more than one audit. All right. So the difference, this one is different from current file. Current file contains information of relevance to the current year's audit. So this one contains information you are using in the current year audit. Example, some of the information that is contained in that current file include: 1, the final financial statement and auditor's report. So that means that the draft audit report and the financial statement for the current year under review will be contained in the what? In the current audit file. Number 2, a summary of audit adjustments, including those not included in the final reported figure. Audit adjustment also will be there because you raise the audit adjustment when you are trying to pass your journals, right? So it will be and when you pass journal, it's relating to that particular year of audit. Next, your audit planning documentation or your audit plan. The audit plan, I say, is supposed to be changing from year to year. So your audit plan documentation will also change. Okay. Number 4, audit control material. What do I mean audit control material? That's what we call control document. Now, in audit, that's what we call time budget, review points, and points for consideration by the engagement partner. So what that means is that when they is setting out to go and do their audit, there's some document that they use, there's some checklist, there's some form that they use. Some of them is the time budget. To know that, so as you are carrying out your engagement, you are noting the time you are expended, you had expended on that engagement. That's what they will use to calculate the fee that will pay to the auditor at the end of the engagement. Okay, review point also is just like that checklist that review what they set out to do, and at the end of the day, they are checking that have they closed out on all of these areas that were supposed to have been ticked out as completed. Okay, that one too is relating to that particular audit, so it will be in the current file. Audit letter. Audit letter will also be there. What are audit letters? Examples of audit letters are your letter of engagement, your written representation, and your letter of weakness or management letter. So your audit letter are what? Your letter of engagement, right? Your written representation and your what? And your management letter. All right. Now, other information that you have there is for each audit area, such as inventory, sales, and payroll. So for that one, it will also be there. Your schedule of payroll, inventory, okay, and sales will also be there. It pertains to that particular year. Then the audit plan pertaining to the work to be done on that area will also be there. Okay. Details of items selected for testing and the result of the testing also will also be there. Okay. Then all those schedules, tax schedule, purchase schedule, sales schedule, all those expenses schedule, all of them will be what? Will be contained in the current audit file. Okay. So let's go back up to look at the importance of audit documentation, audit working paper, audit documentation. The audit documentation is necessary. Number 1, for quality control purposes. What do I quality control purposes? Now, in audit firm, they have some form of control in place that they use to check their documentation. So it is called what? Quality control purpose. So if somebody takes the auditor to court and say that he has not carried out an audit engagement, it is that documentation that will serve as the evidence that the auditor actually executed that audit engagement, provided he has that working paper. But if he has not executed that document, that will be what will be used against him to confirm or to pass judgment that actually he did not pass, he did not carry out the engagement. Okay, that's number one use. Number two use of number two importance of working paper is that it can be used as a point of what reference for future audits. Okay, when you have new employee joining, new audit staff joining the audit firm, the audit working paper will be used as what point of reference, so you can read and understand what they understand. To read and understand the process known as what audit documentation. Okay, so these are some of the importance of audit working papers. It's not exhaustive. We can still add more. Okay, I think we'll look at that. Any question on that? Uh, that's audit documentation, right? Mm, okay, we look at the parent and current audit file. Let's look at this one also. I need us to look at this. Now, after the auditor has completed the engagement, please note this. This is the area you need to be very careful and be mindful of. After the auditor has completed the audit engagement, he has within 60 days, okay, to assemble the what? The audit working document or audit working paper. I take it again. After the auditor has completed the audit engagement, he has 60 days to compile his audit documentation and put it in where it's supposed to be kept. Please, they can ask you questions. You can see case study that they talk about this. If you don't know, now they might put 45 days there. That the auditor did what you need to or they say 90 days. You see it there. These are areas that you need to be conversant with, right? Okay. So the auditor must also ensure that he documents this area when and by whom the modification were made. So what that means is that when the editor is documenting his audit working paper, he must ensure that all the people that were responsible for the review, their names are what are imputed. Or when there are changes to those audit working paper, the person that affected those changes, his name must also be what be included. The reason for those changes must also be stated. Okay. Then, if they has performed additional procedure, because for you to change some audit procedure, we mean that you have carried out additional procedures. So those additional procedures, you have to state it, whether the additional procedures have been carried out or not. Then lastly, because you have already had your previous conclusion, but after the execution of the additional procedures, you had what? You reach new conclusion. So that's those new conclusions that you reach, right? You need to also state them. All right. I hope that is clear. Now let's look at this area. All right. Papers prepared by client. Papers prepared by clients. So let me explain. It is a duty of the auditor to prepare the audit working papers. However, there have been instances where the auditor we we delegate this activity to their clients to do. Okay, it's duty of the auditor to document their engagement. However, there are instances where the auditor has delegated this activity to their clients to do on their behalf. So what the law says is that, yes, the client can help them to prepare the audit working paper, provided the clients have been notified, okay, at the onset, before the audit commence, that these are the things you are going to help me to do. Help me to collate my audit working paper. And upon collation, the auditor in charge must review the collated audit working paper by clients to be sure that they have been collated in line with the process or procedure obtainable within the audit firm. And upon that, you must also check that his partner, I mean the supervisor, has also reviewed, and his name or their names must also be imputed or added to the audit working paper before that audit working paper can be admissible or added to the existing working paper about that engagement. Okay, I hope that is clear. All right. So let's go on. We'll go to the next one. Characteristics of a good working paper. That is, when you talk about audit working paper, what are those things that they must have? Number one, it should state clearly the audit objective. Audit paper should contain what? A clearly stated audit objective. Number two, it should state the year or period under review. Okay, it should state the year or period under review. Okay. Number three, it should state where necessary, where reference have been made to previous audit working paper. You need to state it. There are times when the anytime the auditor comes for the audit, he start from where he ended the last time, the previous time. So we'll start from there. So there are times when you need to make reference to the previous audit working paper. Okay. Number next, the audit working paper should state clearly the result of the test carried out without bias. All those audit tests must state it. Okay. Number next, the audit working paper should state the conclusion reached. Okay. The conclusions reached during the audit. Those conclusions that were reached during the audit must be stated, and those conclusions must be what? Must be consistent. The audit working paper must be clearly referenced so that it can be filed appropriately and found easily when required for a later date. That is, you must be able to reference your audit working paper correctly so that for easy retrieval for in future, okay, when they want to obtain information from them. Okay, the audit working paper must be signed by the person that prepares it. Okay, also the audit paper must be signed by the person that reviews it. The reviewer name must be there. The preparer name must be there as well. Okay, so these are some of the characteristics of the audit working paper. Any question? Okay, that takes us to the next one. Computer generated audit working paper. Now, these days, we don't have the manually generated audit working paper. Everything has become digitized. So all what audit working paper now, they are obtained or they are obtainable on the system. So you have the analysis schedule, you have the lead schedule, and you have the draft financial statement. All of these are obtainable on the system now. Okay? So these schedules can usually be cross-referenced and updated automatically as the audit proceeds. So you don't need to use paper again. You are using everything is on what? It's on the system. So what are the advantages of having the software packages? Now, when you are using the computer for your audit documentation, working paper, it has some benefit. Number one, the audit working paper are neat and easy to read and in a standard format. That is self-explanatory because the audit paper will be what? Will be neat, that is, will not be torn. There will not be let me clean this one, let me add this one, let me TPEX this one, let me use correction field, nothing like that. Okay, and it's always in a standard format. Number two, there's a lower risk of error by the auditor in processing adjustments. So what that means is that if there's any need for adjustments, it's easier done on a system than when you're doing manually. Because manually mean spending extra time, okay, and exercising more effort. Number three, the audit review process by senior manager, okay, or the audit partner can be carried out remotely. What that means is that, like we are doing now during COVID, remember, all audit firms, if not all of them, they worked remotely. Even up to now, there are some audit firms, the big four, some of their staff, they still work remotely. They don't come to office. They work remotely. Why? Because it is system based. Whether you have network, you have light, you have network, you have light, the work can be done anywhere. we have accessibility, the work can be done anywhere. Okay? Automatic processing of adjustment by the auditor using software may result in significant time savings. What that means is that mostly now audit where they make use of audit software. Example is the audit command language, okay, or caseware. So all these audit software have made life easier for auditors now. Okay, so they can carry out they can carry out adjustment easily and very smart, and they will have saved a lot of time. All right. So these are the advantages of using computer software packages for the audit working papers. Okay. Any question? Any comment? Any observation? Okay. We go to the next one. Ownership, custody, and confidentiality of audit working paper. What that means is that who owns the audit working paper? The audit working paper belongs to the audit firm. Okay? The audit working paper belongs to what? The audit firm. It does not belong to the client. Okay? It does not belong to the client. Okay? So at no point should the audit working paper be used as a lien. Okay? What I'm saying here is that when the client refuses to pay, you now see that they now hold on to the audit working paper. The audit working paper belongs to the what? To the audit firm. Okay? And information contained in the audit paper should be kept what? Confidential. Okay? The information contained in the audit working paper should be kept what? Confidential. Should be kept confidential. And it is the auditor that owns the audit working paper. The auditor owns the audit working paper. And what that means is that the paper cannot or should not be destroyed. Even though audit firm have different archival system or procedure obtainable, so the audit firm will apply the archival system that is what? That is suitable for the organization. Okay? Any question? So the custody of the audit working paper is for the what? Is for the audit firm. Okay? It's for the audit firm. It's not part of the client's accounting records. Okay? It does not belong to the client. So that is what we need to know about that. All right? Okay. So far today, we've been able to look at audit document. We started with audit evidence, right? In audit evidence, we define what is audit evidence. We went on to look at the significance or the element of audit evidence, where we have sufficient and appropriate audit evidence. We're able to look extensively into that. All right. Then again, we went on to look at the design and performing audit procedures for obtaining audit evidence. Okay, which takes us to looking at the financial statement assertion, where I said that there are three types of financial statement assertion: assertion based on transactions and events, assertion based on account balances, and assertion based on presentation and disclosure. We look in depth at these areas, right? Then we went on to look at the methods of obtaining audit evidence, where I made mention of seven. The first one is was inspection. We talk about observation. We look at external confirmation and procedure. We look at recalculation. We look at performance. We look at analytical procedures. And the last one, we look at inquiry. Then that takes us to the generalization of audit evidence, where I made mention of four generalizations. That is, the reliability of audit evidence is increased when it's obtained from an independent source outside the entity. Number two, I said audit evidence obtained directly by the auditor is also more reliable than audit evidence obtained indirectly or by inference. Okay. Number three, audit evidence obtained in documentary form is more reliable than audit evidence obtained in an oral form because it can be denied. Number four, audit evidence provided in original document is more reliable than audit evidence provided in photocopies or facsimile. Where I say that you need the original document. Original document is always one, but photocopies can be several. Okay. We look at all of that. Then we also went on to look at the method available to the auditor for selecting items for what? For testing. For selecting items for what? For testing. Okay. Where we said that there are three methods. Either it selects all items, and I said that when selecting all items, it means that the auditor, the inventory or the items are what? Are small. They are of small quantity and of higher value. You can afford to count everything. Okay. The second method is selecting specific items. That means you just select part of them. You take part of them, of all your SKU, stock keeping unit in your organization. Okay, and use it to arrive or conclude at what your items you are going to test. Number three is when you use what? Audit sampling. Okay, you use audit sampling. Why I said that you take a sample of the population and use the what? To generalize or to conclude on the entire population. All right, we look at all of that. And that takes us to looking at what we call sampling and the types of sampling that we have, sampling method that we have. Look at random sampling, we have systematic sampling, we have haphazard. These are not all, they are not exhaustive. We still have stratified sampling, we have multi-stage sampling, okay? We have cluster sampling. All of these are different sampling methods that can be used, okay? Please, that does not mean that you limit yourself to these three. You can learn more. Hello? Please, mute your mic, Tongret. Tongret, mute your mic. Okay? Then we talk about deviation or misstatement. We explain extensively what it means. Okay? So then we went on to look at audit documentation, otherwise known as what the audit working paper, where I said that the relevant standard is ISA 230. Okay? And we were able to look at what it means and the types of audit documentation that we have. We have two types of audit documentation. We have the permanent audit file and we have the current audit file. I said the permanent audit file contains about information that can be used for more than one audit. Example is when we have the article of association or memorandum of association. Okay. Then we have the second one, the historical background of the organization. That one cannot change. Okay. The list of loan agreements also cannot change, or information contained in loan agreement cannot change. Unless there is a clause. We also went to talk about the information contained in accounting policies can also not change unless there is an addendum or there is a revision on it. And lastly, we say that information about the past financial record or information cannot be changed. All of these were looked at. That took us to the current audit file, where I said that the current audit file has to do with what? With the information that that is obtainable about a particular engagement, okay? Or that is related to the year of audit that we are doing. The year of audit that we are doing, okay? So that is what we said, right? The year of audit the year that is under review. And we said information that is contained there is the draft audit report and the financial statement. We have the audit journals, okay, that are also contained there. We have the results of the audit samples and tests that were carried out, okay. We have the audit planning memorandum, and we have the audit control document also that are there. Included also, we have the leading schedules that we also talked about, right? All of these were discussed extensively. Before we now went to look at what the before we now went to look at what the importance of audit working paper. Okay, the importance of audit working paper takes us to looking at why do we have audit working paper, And I said one of it is because of what? For quality control purposes. Okay, that is a document that is you have it documented to show in a court of law that the audit was eventually conducted or carried out. And secondly, for future reference or training. Okay, if you have a new start that joins, you can read through the audit documentation to have an understanding of what an audit documentation is all about. Okay, then we talk about avoiding unnecessary paper. That is, when you are gathering audit evidence, the auditor needs to be sure that whatever information is gathered support the audit report. So any information that does not support the audit report should be what? Should be jettisoned. Okay, all right. Then we now look at the content of the audit working paper. The audit working paper has that is, if you take any particular audit working paper, you must find this information contained therein. Number one, the audit paper must contain the name of the client, XYZ Limited. Number two, it must contain the period covered by the audit, year 2022 financial statements. Okay, it must contain the subject matter, that is the subject matter, the title must be contained therein. Okay. Number four, the file reference. Okay, the file reference must also be there. That is, if they are making use of other additional information or source documents, you need to also include it. Okay. The initials and signature of the member of staff who prepared the audit working paper and the date at which those audit working papers were prepared must also be contained. Okay. All of these were looked at, right, in chapter 6. And we also say that some clients can assist the auditor to prepare the audit working paper. I said if that happens, the auditor must have informed the client earlier, okay, before the audit commenced, so that all the things that I need to put in place will be what? Will be put to place. And at the end of the day, the agreement partner will now obtain uh the client documented audit working paper and reviews it and ensure and append his signature and present to the supervisor to check, okay, before to check that is in line with the template or the requirement of the audit working paper or other audit working paper will now be included as part of the auditor's working paper or audit documentation for that audit or for that period. Okay, so that is that what we said. If he's not able to have that meeting before the audit started, then the client cannot assist the auditor to prepare the audit working paper. Okay, then we look at some characteristics of audit working paper. Okay, where I said that there must be a clear objective. That is, for every audit engagement, there's always an objective. Okay, number two, you should state the period under review. You should always state the period under review. Okay, number three, I said I should state the extent of the test or the result of the test that was conducted. Okay, number four, that's audit test. Okay, so and also proper reference must be made to additional documents that were used during the course of the engagement. Okay, next. The auditor should also ensure that the conclusions which are consistent with the result of the test conducted. Okay, so all those tests that were conducted, the only essence is to assist the auditor to make informed conclusion about the audit report. Okay, and those audit tests must be consistent with the audit opinion. All right. Then we also look at it should be signed by the person that prepares it. Whoever prepares the documentation should sign off and append his name, as well as the person that reviews also must append his name and sign off. All right, we look at that. We have looked at that in this particular class that we have had today. Then we went on to look at computer-generated audit working paper, where I said that most of these audit paper now that we were talking about before now were manually generated, but now they are system-based. Okay, and what they have done is that they've made life easier for the auditor. All right. We went to look at the ownership, custody, and confidentiality of audit working paper. We talked extensively on that. All right. So with that, we been able to discuss extensively on the audit working paper, okay, or audit evidence per se. So does anybody have any question before we proceed? Because we are not done yet. We still have 30 minutes. Anybody have any question? Any question, any comment? Any question, any comment? Any observation? Please, I'm waiting. Oh. I'm waiting for you people. Please respond. Please respond. Any question, any observation, please respond. Are we together? Anybody there?
Together.
Yes, I'm here.
Any
Yes,
question?
yes.
Any question?
None from me.
Okay, thank you. So I'm trying to see if we can look at a question on what we have done today. I'm just trying to see. I'm looking at the question bank. I'll share with you shortly. I'm just trying to see if there is any question that we can quickly look at. Let me see. Okay. I'm trying to see if there's any question that we can quickly look at before, because audit evidence is one area that they normally test. All right. They normally test audit evidence. Is one area that you cannot run from. Okay. They always test it. Trying to see. Also done. I'm trying to see if there is. If I'm able to get any question, will try and solve it now. Otherwise, I will send those to us as an assignment, and I would like us to please take it seriously and do those assignments, because it's part of your learning. If you don't do your assignment, it's as if you are not committed to this course. All right. So that's why I said that I'm looking for it now. Just give me some time. I'm checking for it. If I see it, that would be good. Otherwise, once I find it, I will send it to us as questions. Okay. Okay. So that is what I'm checking. There was a year that they said questions basically on audit evidence. Okay, 3 questions or 2 questions on audit evidence. So imagine you've not read, understood audit evidence. How will you be able to tackle the question? How are you able to answer the question when such arises? So that is why it's expedient that we have a good understanding about the audit evidence. Okay, and that's why I say I'm taking my time. All right. So I just found the question now. Let me reshare. Uh, Let me reshare. I know time is past spent, but it's nothing we can do. We just have to see what we can do. This is a question here. We might not be able to finish it, right? But I'm going to look at it. Now, you have a question like this in your exam. How do you go about this question? Now, you have a question like this. It's expected that you read and understand this case study well before you look at the question. Don't form the habit of going to read the question before you come and read this case study. Otherwise, we are going to develop what we call a narrow-minded perspective. A narrow-minded perspective. That means you will not be able to see beyond the line. There are some answers that are implied in audit examination. But if you go and read the requirement because you want to save time before you read the case study, I'm telling you, some of the answers you are seeking might not be in the case study. Some of them are implied answers. to look at it. So you have a question like this, you need to read it. You have a passage, you have to read it very well before you go to the requirements. Let's see together. At one of the seminars you attended on legal and regulatory framework of financial reporting, it was stated that one of the duties of Financial Reporting Council of Nigeria, FRCN, is to provide legal and regulatory framework for minimum practice guidelines for auditors in Nigeria. To do this, they, FRSC, are supposed to ensure that all activities of registered auditors, other assurance providers, and audit committee members are regulated with a view to sustaining best ethical practices capable of what? Promoting quality audit services. It is part of the obligation of the Financial Reporting Council of Nigeria to conduct practice review of registered professionals. You learn from a seminar that for the Financial Reporting Council of Nigeria to do this effectively, the audit regulation requires examiners to create audit file for each of the statutory audit carried out and ensure the retention of the working papers and other materials that support the auditor's conclusion in any audit report for a minimum period of 7 years. A classmate of yours, a classmate from university who now works in a bank and attended the seminar with you has asked for further explanation on what is meant by working paper and why it is of great importance that a regulator has to be interested in the review when there are other important duties to be carried out. We now ask you, identify the different types of audit working papers. Now, when they ask a question like this, what does it mean? Who can answer this question? We've talked about this tonight. Who can answer this first one based on what we have discussed today?
Permanent working paper and current working paper.
Thank you very much. You can see now it's easier. Why? Because you have understood what we have discussed. So you are not only going to talk up, you are not going to list them, you are going to explain them and give those exams. Because they put 5 marks, that does not mean they just have to say permanent audit working paper and current permanent 5 or current 5. It's not permanent audit working paper. It's permanent 5 or current 5. Okay? So you need to explain it, what you understand by that. And all those examples I gave must be given for you to get your 5 marks. So if you just go and put permanent audit 5 and current audit 5 only, they will not even give you 1 mark. I'm telling you, the person will get half mark. But your disposition to explaining in detail what you have just explained or what you have just listed or identified will now earn you your 5 marks. So don't say that when you say 5, I mean that you just mention 1 or 2 things. You need to be intentional when you're answering all these questions. That's the only way you can pass audit. Audit is not difficult. You can see that you're able to answer, but your answer is not complete. You told me the 2 answers you said yes, but you need to have gone further to explaining them, and that will fetch you your full mark, 5 marks. 5 marks, you might see that it's very small, but in the exam, it will be the determining factor from you succeeding and the person coming back to come and write again, okay? So that's not our portion. So please, I hope you are learning from the way you answer this question. The second one, outline the importance of audit working paper. I've talked about, I gave us 2, right? Who can mention the 2? Who can explain the 2? Anybody?
Yes, sir. You said for quality control.
Mm-hmm. That's one. What else? Let's see. Okay, at least you tried. The second one is for what? For future reference. For future reference. Okay, for future reference. Okay. Another importance is to show that the audit was actually carried out. Okay, so you can see now, this is just first time we are meeting, as in we are just talking about this topic. But look at the enthusiasm we have shown in answering the question. So that's how it is. So the more you practice the questions, the better you get and you're able to answer correctly, okay? Please endeavor to practice more past questions, okay? The last one, explain briefly the condition that determine the size of the audit working paper, okay? So these and all these ones that you have here, you can now, since you have made some attempt, you can now go to the solution, the solution. You must not go to the solution before you attempt. You must have attempted. Then you go to the solution and see whether what you have written down corresponds or tallies or aligns with what the suggested solution is. Okay? That is the way to go. So let's go there. Because of time, okay, let's go there to the question 6. Let's go to question 6. So you see what we have said now. This question 3. This question 4. Question 5. This question 6. You can see types of this working paper. All of this work must be properly documented and held in a file. It has been a normal practice to maintain two types of file. You see, permanent file and a current file. You have seen it now. You saw the way they explain everything, just like the way what I said. Legal constitution, summary, you can see. You must not just mention the name and thought that you get your 5 marks like that too. You must go in detail. 5 mark is not small mark in audit. If it's in FR now, it can give it to you because 2 plus 2 is always 4. But in audit, you have to explain why that 2 plus 2 must be 4. All right? You see the second one, importance of audit working paper. Enhancing the quality of audit work, you can see. Facilitating effective review and evaluation. Assisting the auditor, assisting the audit team to plan and perform an audit. Number next, assisting supervisors in directing and supervising audit work. Number 5, keeping a record for matters for continuing significance for future audits. You can see it here. Okay, then go to the last one. Conditions that determine the size of the audit work paper. Number 1, the nature, timing, and extent of the audit procedure is 1. Okay, the result of the audit procedure and the audit evidence obtained. The significant matters arising during the audit and the conclusions reached thereon. Number next, the nature of the financial statements and report. The last one, method of audit documentation, whether paper, electronic, or other media. Then don't always forget to also look at the review, the examiner's report. This question tests candidate knowledge of audit working paper. About 50% of the candidates attempted the question, but the performance was just average. That means that he did not answer it to the satisfaction of the examiner. Okay? The comment read for was the candidate poor knowledge of audit working paper. Candidates are advised to read relevant text and item pathfinder when preparing for future exam. It's just what I just said. Okay? So for the purpose of this class, I expect that you practice more questions. So thank you for your time. For those of us that have been able to stay this long, okay, or thus far, okay, and I hope that your stay, okay, has not been a fruitless exercise. I believe that you have gained 1 or 2 things from this class, okay. One thing you need to know is that for you to pass an exam, you have to make tangible commitments. Okay, you have to make serious commitment. It's that commitment that is going to show forth for you. Prayer alone cannot do it because prayer without work is dead. Okay, faith without work is dead. So you have to work. God that sees your heart, that sees that you have diligently seeking, you have done what you needed to do, will grant you success. But when you have not done anything, you now go for vigil and say, God, I will pass in Jesus' name. That kind of prayer will not be answered. Because that means that if God answered that kind of prayer, that means the other people that have been diligent, committed to the same cause, what will happen to those ones? And that's why your commitment is very important. If you're writing 1 paper, you're writing 2 paper, ensure you put in your best. Because you never can tell. But one thing that is assured is that your success is assured if you are committed to the cause. Avoid distraction. Start your reading now. Don't wait till a month to the exam. Don't wait till 2 days to the exam. Start your preparation now. That by the time the exam comes, you're already familiar with all those areas. You will not be jittery of where they are going to set questions when you're already familiar with all the areas that questions can come from. Okay? You will not be jittery. You will not say, I don't know how the question. You will not be apprehensive because you know where the questions, anywhere they come from, you'll be able to answer. One of the reasons why students fail the examination is because of the fact that they are already defeated before the exam started. So students have not read. So when they saw the question, the little that they have read will just disappear. And before those things will start coming back, before they start recalling all those the knowledge, it will take time. Maybe the exam is about to be over. So please start your preparation now. You cannot give what you don't have. I keep saying it. You cannot give what you don't have. Start your commitments now. And at the end of the day, you have cause to smile. So on this note, if there are no questions, no comments, no observation, I call the class a day. Unless you have questions, comment, or observation. I'm waiting. If there's any question, observation, please do signify or go ahead and say what you want to say.
Hello, sir.
Yes, go ahead.
Um, regarding what you just said now, I think it's actually advisable to check the requirement than reading maybe the story or whatever. Because a question like this, maybe going to the requirement, you've already know what they're asking you. And you can just answer it without even reading the. So
Which
when you
one?
said, I mean, in answering a question like audit
Yes.
question in exam, you said it as advisory. You read the maybe the story
First,
before going to the requirement.
requirements.
So
Yes.
like, but in other courses, they advise you first of all read the requirement before
That's
the
that's
story.
other courses now. The one of the essence of this class is three things. Number one, to teach, for you to learn. You are learning, right? Number two, you have to unlearn. There are certain things that you have known all the while. You have used them, but it has not worked fully for you as a student. So this forum or this forum we are in now is an avenue for you to unlearn. We are going to tell you, like I just explained now, that ensure you read the case study before you go to the requirement. That is the order for audit. You go and read the question before the case study, you are going to miss it. You're supposed to get 100%, you might end up getting 50%. Now, you will think that, okay, that's fine, 50% is fine. What if you have done the other way that I just explained now, you get 100% or 80%? Okay. Number three is an avenue for you to learn new things. So this is a new thing you have learned because you just said now that before now, another course, they tell you that you first of all read the requirement for the case study. But I'm telling you, for you to pass audit, you have to read the case study before you go to the requirements. That is the best approach. So thank you for your question. I hope I'll be able to answer your question.
Yes, sir. Thank you.
Okay. Any other question? Any comments? Any observation? We are good, right? Thank you for your time. If there are no questions, you can call it a day. At least we have done some hours. So we just have a few minutes to 11. So thank you. And have a good night rest. And if you come up, if you have what we call a brainwave, okay, something crosses your mind, you have my number. So I put it on that WhatsApp platform. I will diligently be waiting to respond, okay, to all your query, concerns, or observation. Okay. So if there are no questions. With the authority vested on me, I hereby adjourn the class. So your next class, you'll be discussing internal control. That's chapter 7. So please, the material will be sent, okay, in due time. But if you have the audit, the ICANN study part, you can start reading that before then. Okay.
Hello?
Any question?